Hi everyone, this is Prasad Angaluri. In this video, we are going to talk about is Amazon stock worth investing at current price. As I am recording this video on December 19, 2018, Amazon stock price is at 1,495 each stock and the valuation of the company is 731 billion. Also, you may know Amazon stock went all the way up to 2000 each stock in September 2018 and now we are talking about around $1,500 each stock. Yes, we all know Amazon is an amazing company. I don't disagree with that, and we all use Amazon.com for a lot of our online shopping. However, when you want to invest your hard-earned money into Amazon stock, I want you to take a look at it differently and analyze the company in a different way. So I want you guys to go online, like for example yahoofinance.com or Google Finance, and try to compare three biggest companies. For example, Google, Microsoft and Apple, because these companies' valuations are above $700 billion, which is comparable to Amazon. So let's take a valuation of all these companies. So Google is $715 billion company and Microsoft is valued 800 billions and Apple is valued at 763 billion, whereas Amazon is valued at 731 billion as of December 19th, 2018. Okay, now let's take a look at and compare financial statements for all these companies. If we are looking at profit and loss account statement for the last 3 years, starting from 2015, Amazon started with a $500 million net profits, and then in the last year 2017 they made 3 billion net profits. Whereas you compare with Google, which has an average 15 billion to 20 billion in the last 3 years, and when we compare with Microsoft, they are making 20 billion to 25 billion, and Apple has been making at least 50 billion to 60 billion every year. Now let's take a look at a balance sheet which has assets and liabilities. Now Amazon has net tangible assets as we speak right now at $10 billion, and when we compare with Google, which has $100 billion net assets, and Microsoft has $15 billion net assets, because Microsoft also pay a dividend to shareholders, so I think their net assets are a little bit low, but still they are more than what Amazon has. Amazon doesn't pay any dividend like Google, of course. And then Apple has $100+ billion assets. Let's take a look at the PE ratio of these companies. Amazon PE ratio is 80 and Google's PE ratio is 40, Microsoft PE ratio is 40 and Apple's PE ratio is 13. So as you know, a high PE ratio is a high risk. At this moment, Amazon stock valuation is based on future earnings, and also in my opinion, there is a lot of hype involved in this pricing. So if you are investing your hard-earned money, I think you want to be careful and take a look at few things here. So if you take a look at major retail companies, everyone has their own online shopping and they are delivering it free of cost. So there is a lot of competition. I mean, if you look at Amazon, Amazon doesn't manufacture their own clothing or anything. So it always depends upon other sellers. But if you are looking at Macy's or Kohl's or any other major brands, they have their own manufacturing units and they are selling on their own websites. So we all know that Amazon is doing really great on cloud services like AWS. However, if you take a look at major companies like Microsoft, Google or Oracle, everybody is investing heavily on cloud, and Microsoft is a really biggest competitor to the Amazon. And coming to Amazon Alexa, we all know that it's doing pretty good, and of course there is a competition for Amazon Alexa also from Google. I mean, we have Google Home. Here overall I suggest you to understand how much Alexa is contributing to Amazon's gross revenue and value Amazon stock accordingly. Also, if you take a look at Amazon, it's heavily dependent on one key person, Jeff Bezos. So that may not be comfortable situation for an investor to depend upon one individual when you are investing. So for Amazon, Jeff Bezos, CEO, is a key individual and company is heavily dependent on his ideas and his driving force. So that may not be a good thing overall if you are investing your money. If you compare Microsoft, Google or Apple, they are not dependent on a single individual. So in the next 3 to 5 years, what if something happens to overall business revenues of Amazon? There is a possibility that Amazon stock can go down. It could be 20% or 40%. So it's better that you careful and do your analysis before you're investing your money. So as an example, if you take a look at like few stocks, GoPro or Snapchat or Fitbit, all these stocks were valued at a higher price like a couple of years back, and they were valued 10 times of the current price. Thanks for watching my video. Stay tuned and please do subscribe to our channel. Click on bell icon to be notified for future videos.